Greetings. This is Dr. Jeffrey Scott, and this is my weekend market update for January 8th, 2022. For those that are new, please subscribe and then click the alarm in the YouTube um, site, and that will give you notification when I post these. For those folks that I met at this weekend's Tampa meeting, it was a great time. I always enjoy meeting new traders. I hope I don't scare you with all the funny words that I use. But if you reach out to me at my email address, hdsidoc@gmail.com, I can always share a short PowerPoint of the vocabulary. Now, I do not think a new bull has started, but I wanted to put a catchy title because maybe I thought I'd get more people come and watch the video. And that's why there's a question mark. Could be a new bull. Friday was beyond a doubt way over the top move. Um, when I looked underneath, as we'll talk about as we go on this evening, I'm doing this on Saturday night the 7th, so the evening, I'll show you why there's a few things I'm a little disappointed about. But that said, it was a ferocious move, salvaged the first week of the year, and I believe there's some old wives' tales and data that says if the first week is up, the first 3 days are up the trading year. We've had 4 so far. That talks about a good outcome for the market. A couple other housekeeping things. This will be different this week. I'm doing this in 4K. I'm going to show some other programs beyond wealth charts, and I can do it easier in 4K. So if it's blurry and you have a 4K monitor or a 3K monitor, wait a while and let the 4K render. It takes a while to get there. And why am I showing other programs? Because I get a lot of emails and a lot of calls about what do I use and why do I use different programs. So I'll mention some of the reasons as we go, and I will tell you that how I approach the market on the weekend is different than how I approach it during the week. On the weekend, I have a lot of free time. My kids are grown. I have a grandkid. I'll spend as much time as I can with her, but that usually doesn't last long. So I have time to look at charts. During the week, it's pretty much a wealth chart story because I can do so much so fast, and I'll show you that. So that is actually me. One of the bankers on one of the deals I did made bobblehead dolls of my partner and I. It's the last surviving Jeffrey bobblehead. Disclaimer, this is for education only. I'm a doctor, not a broker. I'm independent. And the benefit of being independent is I can use lots of different tools. I'm not affiliated with any software vendor or trading company. And the tools I demonstrate are those that I use in my daily trading. And I've paid for those tools. And trading involves risk, and you alone are solely responsible for any investment decisions you make. So this is coming. It's the 16th is the first time I'm talking in the morning, I believe, from 10 to 11. It's going to be a great week. I love these weeks. They're 4 times a year. If you don't have wealth charts and you're interested in it, it's the least expensive time of year to buy it. If you're interested in my add-on, of which I hope you are, but plenty of my stuff is in the program, just in the base program. It's a good time to purchase because everybody, all the different speakers that have tools, usually give a special price at this event. When you look at the markets, and again, this is 5 days. It was a 4-day week, so it's taking Friday last week and then the 4 days this week. So the first thing is, if you look at the 5 days, the Dow was up 1.3, the NYSE up 2, the Spiders 1.2, the Russell 1.6, and the Nasdaq Composite and the Qs were up about 0.9. All of the gains for those 5 days essentially came in on Friday, as Friday's 1-day performance outperformed the 5-day performance. So you want to be bullish. The 5 major indexes were up. It really was a story about probably Wednesday when the market had a bit of a rally, trying to salvage Santa Claus, and then Friday where the market knocked it out of the park. Now, if we look at the yellow, you can see another thing, which is how much off the bottom. So, the comment, are we in a new bull? Well, heck, the Dow 17.3% off the bottom. It's about to be 20% if we get any follow through this week. So I guess in that perspective, maybe we are. You could see how the Qs have lagged on the off the bottom. When you look at off 52-week highs, these numbers will continue to adjust because, for the most part, we have lapped the highs, um, or we're about to lap the highs of the last 52 weeks. And you can see how Bitcoin has been cratered, natural gas up and down, down now 65%, and Kathy Wood's ARK, small cap growth. When I put that there, I'm not really picking on Kathy. I don't know her. I'll never meet her. She has no idea who I am. But she buys small cap growth in Tesla, and it's not working. And Tesla, which has helped in the past, isn't helping at all. And then another small cap growth is the IBD 50, down 50% since January 13th. So you got to know your markets and what is working, what had the best week. Well, it certainly wasn't natural gas or oil. And maybe that's why the market was up. Treasuries were up 4.5 as rates have come down, and Bitcoin actually was up a bit as well. On the sector front, if you look at 52-week highs, you can see discretionary communication technology lead to the downside. And you could see that all of them are double figures off their lows from the sectors. So we have come a long way already. Now, Q Edge shows a dramatic change, and you're going to see that in multiple programs. So Q Edge is a spreadsheet. It is one of my tools that you'll find on a monitor during the day. And why? Because I'll talk more about the buckets as we go, but it gives me real-time buckets. It gives me real-time performance of sectors, industries, and stocks events. Tells me about the sectors. It gives me a sense of what's working now, and I could drill down much further. I turn you on to Sager's Trading Profitable, Superior Profit on YouTube. He does great weekend reviews as well. Well, notice what happened on Friday. All the sectors were up compared to the month, of which 64% are up. 96% of the industries were up compared to 50% on the month, and 93% of the stocks are up compared to 50% on the month. And if I had showed you this from a day before, none of these would look as green. This one-day performance really drove a change in the picture. The other thing here is look at 21.3%, and that represents stocks above their Bollinger Bands, and that compares to 1.3%. So if you look at the S&P 1500, 20% more on Friday are above their Bollinger Bands. That is a huge move, especially since a week or two ago we were talking about stocks below the Bollinger Band. Now, those that have wealth charts, I talk about certain indicators. I talk about momentum. Well, the momentum is a combination of the kahuna and force, and this is the kahuna. I talk about volume, which is a derivation of the pocket pivots, which we don't really see any on the spiders that I'm looking at here. I talk about momentum. Well, excuse me. Talk about breakout, which is the MOBO here, and I talk about big gap ups, which is here. So I've got a lot of duplication, so you're not missing out on the signals. But what I have on this program that I don't have are a number of internal indicators that were built by Ian Woodward, my mentor, and they tell a story here. So the first thing here, this is the spider for a year, from January highs to current. So is the bull market here? You know, you never know what it's going to start sometime, but we are clearly in a downtrend. All right. The red lines, these were Hindenburg omens firing on the way up. And when you see that many Hindenburg omens, that should tell you something's wrong in the market. The market broke the 50, and it was all she wrote. Interestingly, I didn't used to see Hindenburg omens until new highs, but with several of these rises back into resistance, we fired additional Hindenburg omens. Now, why would I be optimistic that we have a run up here? I had a MOBO breakout on the S&P 500. I had a John Person buy signal. This is not available in wealth charts, unfortunately. It's one of my favorite tools. And then I have these three green things, one of which on top represents the NASDAQ, the other two the NYSE, and they're one of Ian's signals called Eureka. You yell Eureka when something good happens. And when you start to see Eurekas and then those kahunas occurring, that's a time to start thinking that maybe we are at a bottom. Now, as a betting person, I respect the trend. The trend is down. This trend line has worked 4 times. This was a false break and we still closed below it on the day. I think we rally into the trend line, which is still a bit of a move from here, and we fail. If I'm wrong and we keep going, then that's awesome because, hey, I'm not overbet one way or the other. And if I'm right, we'll have a chance to short when it fails that trend line. So I learned a lot from this chart, and I'll work with, with Rob as available to see if I can't get those Eurekas and other things into wealth charts. This is the weekly bongo, which remains red, which is really a sell signal for me as well. So could we be near a bottom? Sure we could. Do I think we're at a bottom? I don't. Are easing rates telling us something in the set of Fed tightening? Well, look, we saw a week ago, we saw the 10-year and 30-year shoot up, and they shot right back down this week. I think the falling rates is just a sign of concerns about the economy, and that's what I think is the fear in the market right now. The Fed thinks it's too hot, and the economy tells us it's not. And if we keep tightening, it turns us into a recession. But I think we got a recession coming no matter what. These are a couple of things that you can get off the Fred website. And the first one here in the upper left is credit risk. And notice how if this is low risk, how high the risk is here. It looks at the high yield index options adjusted spread. Markets do not like this. The 2018-2019 market pullback followed a tightening in credit. The 2020 March disaster, February-March, followed credit tightening. Well, we've been in a prolonged period of credit tightening. That's one thing. Now, if I look at the 10-2 Treasury yield, not only has it inverted, it's been inverted for a long time. And if we look over here, going back on the 10-2, going back to 1992, when we invert, we get a recession. We invert, we get a recession. We got a recession here without inverting, but that's why I'm going to talk about the 10-3. So 10-2 inversion, we get a recession. Now what happened in 2020? Well, in 2020, you can't see it. We inverted in the 10-3. So we did get the inversion. When I see this inverted yield curve, I've got to be convinced that we're not going to see a recession. And the scary thing is the recessions don't occur until the yield curve resolves. So we may have a while before we see the recession. And again, what's the Fed doing? They're tightening. Now, with a strong day on Friday, look at what happened. Stocks above the 200, massive move on the week. Stocks above the 40. And then the real fast 12-week new high, new low ratio that I like to see rocketed up near the reversal area. So if anything, maybe we're getting a little hot. More to follow on that. Now, I like to look at AD lines, and they tell a lot. Now, I don't think, and maybe I should make them a line chart, the AD line is the white. This line is the Russell 1000, so large caps, and this is the Russell 2000. Now, if you look at compare the white line on the left versus the white line on the right, there's clearly a divergence favoring strength in large caps. All right, so that's one thing I see. The other thing is, are we going to turn up here? Will we get a higher high and a higher low? And will we see some AD divergence, which would help to make me more bullish? Certainly not seeing it on the mid-cap 2000. If I look at the NASDAQ 100, yes, the market has rolled over, both the NASDAQ 100 in this funny color blue and this other color blue, the NASDAQ composite, the 3,500 stocks have rolled over. But look at the performance of the AD line on the 100s versus the AD line on the NASDAQ. Again, large caps holding up better. Now, I mentioned the buckets before. We have gone from on December 19th, 26, 27% of the stocks in the market below the Bollinger Bands, 91% of the stocks below the midline of their Bollinger Bands. That is a very bearish picture. And now look where we ended on Friday. 22% or so above the Bollinger Band, 72% above the midline. So we have gone from very bearish to almost overbought very quickly. Hindenburg omens. I don't expect to see one. I'm not really looking for one. What I'm looking at is the red new lows on the NASDAQ and the NYSE, and then the green new highs. And notice we actually had new highs over 2% on both the NASDAQ and the NYSE, and the new lows have dried up. That is important because we have not seen on the NASDAQ 3 or 4 days in a row of no new lows or less than 2% going back months. So that might be a change. Green shoot, take them where we got them. And then this is a great report in EdgeRater. It's another program that I heavily use on the weekend. It generates a bunch of spreadsheets for me. Now, I used to do these things manually with Excel and HCSI and exporting, and Chris with EdgeRater made it so easy. I've got two reports here. So the first thing you have to know is that every week I basically save a giant spreadsheet of the database of HDSI, which is the program, www.highgrowthstock.com. EdgeRater can then look at that data and then look at a data element from when I had the save of the file, and then look forward how that data element impacted on performance. So this is data that was taken on the 30th. So it was taken after the market a week ago, and it was data that predicted, or showed rather, what happened to stocks going forward. So if we look at the 4 days of the market, ERG is a combination of EPS rank, relative strength rank, and group rank. And to me, it's the element of growth. And the first thing is when you look over Tuesday, Wednesday, Thursday, Friday, it was junk off the bottom. Much of what we saw in this rally this week with 10% in some of these low ERG, these are junk stocks leading, while the high growth stocks underperformed on the week, which was 4 days. If we look at performance on the left tied to earnings, not really showing us anything. And what's scary, performance related to relative strength, the best performers were the weakest stocks. So that's a junk off the bottom. That's not sustainable. That's not new leadership, and that doesn't get me excited. Let's look over at the right. What happened on Friday alone? End of day Thursday to end of day Friday. It was growth. Growth led. Now everything was up, but this is a totally different curve. And notice that earnings per share actually mattered. Now this is bothersome. It's still showing that relative strength is not impacting. So, and that's a problem for me because I like high relative strength stocks, sort of in the Market Smith Investors Business Daily mode, true market leaders with high relative strength. This tells me relative strength isn't working. So I'm not sure what Friday actually signaled, but I sure as heck like the growth improvement in Friday versus the mush on Tuesday, Wednesday, Thursday, Friday combined. Now, I wish this was going to be a quiet week. It is not. We start with some Fed expectations on inflation. I'm not sure that moves the market. It's looking forward. It's hypothetical. We'll come talk to those in a second. On Thursday, we've got our CPI. So you know what that means. Market's going to trade up or trade down, and then at 8:30 it's going to do whatever it's going to do. So be careful with futures and what you're doing prior to 8:30. We got some jobless claims, And then we got Michigan sentiment and inflation expectations. So there's a lot of news this week. And oh, by the way, Fed head Jerome Powell speaks in Sweden. And I make a comment later, which I'll explain in the summary. Beware talking Feds. We got Bostic on Monday, Powell on Tuesday. On Thursday, we got Bullard and Harker. So let's just call them volatility events. On earnings, it's a quiet week, but what do we see on Friday before the open? Bank of America. So banks with Citi, Wells Fargo, BNY Mellon, among others, First Republic. We got the first of the airlines with Delta Airlines, JP Morgan, don't want to miss that, United Healthcare. So not much in the beginning of the week, unless you own one of them, but a big day on Friday. And this is my quote. It's a judgment call to hold stocks over earnings dates. I look at my position. Do I have a lot of profits? Can I weather a 10% pullback? And I make a judgment call. But it's bad judgment to not know when your stock's earnings date is scheduled. You can get your news out of marketwatch.com. Just Google the MarketWatch calendar. And then earningswhispers.com is my source for this wonderful chart. Free, by the way. So 2% move on Friday was enough to turn the markets positive on the week as investor enthusiasm on the monthly employment numbers and ISM outweighed the pessimism on Thursday's job report. Tactically, Santa came this year. If you look at the last 5 days of last year, the first 2 of this year, we were kind of flat going into Wednesday, and Wednesday was a strong day in the market. So is this a bear market? Rip your face off rally day or the start of something new? The bullish case can be made by the ferociousness, the improved short-term breadth, the eureka firings. I still think my bet is that this will be either a rally day or a follow-through day for IBD. I haven't looked, and now we'll look for more of them. And that's typically a sign of a rally, but they've been failing this year. So what happens next? I can't be overly bullish, so I see us take out that descending trend line. And not only do I want to see you take it out, I want to see you come back and retest it before I'm going to say new bull. But as I mentioned on Thursday's AM video, it was time to take off hedges, enjoy the rally in stocks and gold. My guess is this will be short-lived and we'll retest the lows. But that said, I've got bullish positions. And what I think doesn't matter. It's what do you think? Be your own guru. I am prepared for the market to go higher or lower. If I thought the market was going to go to the moon, I'd have a lot more positions and be margined up. I am not. But at the same time, I'm going to show you in a few moments that we're sitting right on support. So it's hard for me to be too bearish. And I think Friday was pretty predictable, maybe not to the extent. And beware talking Feds. They like to talk down the markets, and we got a lot of them. Now, in a few minutes, when I go into HGSI, I'm going to introduce you to Ian's boxes. And Ian taught me this in 1992. Boy, I was a lot younger there. I was actually still in my 30s. Holy Toledo. I didn't think my wife was, let's see, yep. My wife had not turned 30 yet. Boy, we're about to get Medicare, so it's been a long time. And what Ian told us was that if you can make a box, and I'm going to show you how to do it with HGSI in like 5 steps, and you could look for stocks that have current earnings rates over the last 2 quarters of 100%, 50 to 100, 25 to 50. And then over here, you can look at the annual earnings rates, greater than 50, 25 to 50, and 15 to 25. You populate the box here, 1 through 9. And then if a stock has quarterly earnings growth of 100%, annual of 50, it's going to double in a year, and that's box 1. If a stock has 50 to 100% growth rate, it's going to take 2 years to double, and 50 to 100% and 25 to 50 annual, that's box 5. Box 7 would be a stock that's got massive quarterly earnings but stubbed its toes. Its annual earnings aren't that great. And I'm going to show you why these are so cool. Ian's boxes. So you can always stop the video, take a snapshot here if you want, but this basically goes over the different boxes and what the numbers are. So I could show you 10 market bottoms and what happens. But what you can do today with whatever program you use, even MarketSmith, you could go in and you could build out the boxes and you could start listing which stocks fall in the boxes. Okay? And then highlight them every day, the ones that are breaking out to new highs. Because if we are at a new low, there is a good chance that these stocks are going to lead off the bottom. Not these are from 2013. Now imagine it's June 30th, 2013, and you've put together your boxes. And this was a low in the market. On June 24th, we looked at performance to the market top. So it was a short-term move. Less June to July to August, 10 days less than 2 months. Well, what happened? The S&P was up 6.8%, and every box stock was up at least 9%. Box 4, 5 were up 31 and 27%. Box 2 is 25. Box 6, 20. Box 1 didn't do so well, but it was still up over twice the S&P, and so on and so forth. I have data going back to the 90s. If you're at a low, doing boxes when you're not at a low in an uptrend, you'll get good returns, but that's not where the story is, because they're stocks with earnings. They're the ones that do well. But you look at these at a market turn. So I'm going to show you how to do that in HGSI. And then the other things that I'll probably pull it after this week. One, market bottoms are the blue lines. Fed rate is the dark line. Notice what occurs before all the market rallies, a rate cut. So why would we think we're going to get a sustainable rally in this bear market without a rate cut? The other thing is, do we have a recession or we don't have a recession? This black box here is a mean for all recessions. Excuse me, all bears rather, I'm sorry. 32% down, give or take, lasting nearly 300 days. We are in this range here. This is what happens to the average bear market in a recession. If we go into a recession, you might expect the markets to get a lot worse. I'm going to come back to that. Hold on a second in the slideshow. Here is the advertisement for the Wealth 365 event, and I'm bringing it up because I want you to see you got 8 days, 10 hours, and ... I am going to put this link in the YouTube area, and it's free registration, and I'd really appreciate it if you use my link. The other thing I want to tell you is, if I haven't scared you away so far, and especially if you're a Wealth Charts predominant user, I do a nightly or early morning video a couple times a week. I've been doing them now for months, and they're available within the program. And basically, you get my take on the market in less than 10 minutes. This video could be an hour, but that's almost by design. The videos that I do on the weekends are in depth. The videos I do before the market opens are short snippets with a couple of stock ideas. Now, I've got lots of programs, and what I want to look at here is, okay, I'm letting it's change. I changed my resolution. It didn't like that. Okay, here we go. Here are the futures. E-minis, NASDAQ, Dow, and Russell. Each of these were bouncing on auto-generated trendline support for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. It is no surprise to me that they bounced. Okay? The arrows, John Person's indicators, I'm not going to go into all the Q indicators. So I think this was a natural expectation. Here's the problem. Here are a well-established prior trend lines at resistance. And all of these are in a wedge. Why do I know it's a wedge? Because the red is pointing down, the green is pointing up. Even if we rally, I don't know if we can get through this area. So do I think we rally up? Absolutely. Do I think we break out to new highs? I do not, and therefore I'll be looking for better times to short. If I look at the ETFs, it doesn't look that much different. Same story in wedges with a big move on Friday. Now, before I go to the boxes, I want to show you the other thing that I think HGSI does better than any other product in the market. And, I'm a top-down guy, and yes, I can do top-down in wealth charts, and I think with a little bit of, I've got some thoughts about, I kind of got it to have too many stocks with a prior request. I think I need to back it down. There's just so many small stocks and stocks that are lightly traded. But let me show you what I can do at HGSI. I'm going to look at the market in more detail in wealth charts, so I'm going to move off of that. If I look at the industry groups, in HGSI I've got 175 industry groups. I've been ranking the industry groups by momentum, a short-term and a medium-term momentum, to get a sense of whether the markets are moving up or down, not just looking at the averages, but looking at the industry groups themselves. So if I go to the 2-day force here, I can see that I have 85 of the 175 have a short-term momentum to the upside. If I look at 2-day down, nothing. So that tells me right away that the market had a big shift to the upside. Now, once you've been doing this for 5 days, you end up in this group, and there still are some things excuse me, that are longer term to the downside. Now, I was sitting next to another doc from New Jersey who's got a boat down here, which means boat trips because I had to get rid of mine. And we were talking about some of these life science like PerkinElmer and Thermo Scientific Fisher and how they really look like shorts. Marine shipping, I don't know why it's here twice. I suspect they might be a little different. One might be oil and gas, and one might be dry shippers, real estate, infrastructure. But most of the things are not there. So I had 80 something in the 2-day force up. How about the 5-day up? 80. So most of the industry groups are moving up. That is something that to me would support the idea of a move up to test those resistance, hence why I let go of some of my short positions. Plus, let's face it, how short would you want to be sitting on this support? Okay, I think that support will be broken, but I'd rather let it be broken and retest before I commit myself to the short side. So now I've got 85 industry groups. I've ranked them by this raw combo. And if I highlight something like semiconductors and right-click, change to index group, I start to list all the stocks in the group. And then I can double-click on it, and I can look at the charts. And when I looked at the semiconductors, did I love these charts? No, I did not love them. They're in clear-cut downtrends. Although I love NVIDIA graphics cards, do I want to be buying something that's below the 50 and the 200? Now, it did have a John Person buy. Its weekly bongo has turned green, so maybe I should be considering it, but I don't buy beaten down stocks. I like to buy stocks that are breaking out to new highs, stocks that have momentum. This one doesn't have it. Here it shows me the earnings per share growth for the next 2 quarters, and that's not making me happy. Make sure that it goes in the order of the list. Broadcom. Broadcom looks interesting to me. And as a top-down guy, I typically will go through the top 10. I'll look at the first 3 or 4 because there's some tricks in wealth charts that makes it even easier. Broadcom here, positive earnings growth, not a crazy multiple, pays a 2.9% dividend, and it broke out. In fact, it's now the highest it's been going back to May. So it had a mobile breakout from a squeeze, John Person buy, a volume pivot, pocket pivot, so that's volume, The kahuna, that's momentum. So Broadcom looks interesting. So I might put that in a buy watch list. So I could click to the right, choose, and let's just call it my buy watch. Now I can tell you it's already in there. It's a nice looking picture. And then I go to look at the next one, which is AMD. Reminds me of NVIDIA. It probably will be a good buy here, but it's not my kind of stock yet. I get to the index, I stop. And I click back and I go to the next one, automobiles. Huh, isn't that interesting? Well, look at what Tesla has done. I don't know how to catch a falling knife, but you know, I wonder if this wouldn't be an interesting time to take some of your long-term money and buy some Tesla, Apple, Microsoft, maybe even NVIDIA and AMD. It's hard to believe that they won't do well when we get the next bull. But the reason I'm not doing it is I don't know where they're going to start from. I've been saying for 6 months I'll buy Tesla when it hits 100, so I may have to put my money where my mouth is because it's probably very close to getting there. The low was $101.81, $101.81. So do I want Tesla here? It might be a good place. Got earnings more than the PE. I like that, but right now the momentum so far the negative. I would only buy it because I know someday it'll be higher. I'm not buying it because it's giving me any other signal. And Ford, this one's had a nice move off the bottom here. Doesn't, it's got some big earnings coming in. Ford and GM will actually be big players in EV. I've got a Lucid, and I drove from the Palm Beach County area that I live in out to Tampa. And I have to admit I was sweating. You come across this highway, State Road 60, which is fast as heck. I'm driving 75 miles an hour on a two-lane highway, and I'm being passed. But there's nowhere to charge. And I went to 3 chargers in Tampa before I got on the road because I knew I would not make it home, and none of them would fit my car. And I knew there was one at a service area once I got to the expressway. But when I got there, I had 30 some miles left. What would have happened if they were down? I would have been toast. So I think as much as I love my EV, next time I go on the expressways away for the night, I think I'm going to take a gas car. We got those 2 in this house. So Ford may be getting interesting, but it's certainly not breaking out to new highs. Semiconductor manufacturing, applied materials. Starting to look interesting here because it's about to break above the 200. It had breakout, momentum, volume. This is one that I might put on a watch list and look at. I just don't like the earnings per share growth. Lam Research looks very much the same. Taiwan Semiconductor not quite as good, and KLA Tencor looks the best of them. But we're talking a $400 stock, and this one looks like it's ready to run as well. So I can go through one after another. We'll look at renewable energy, and then I'm going to move on. I have a position in First Solar. I probably should have sold it when it broke down through the 50, but I was so expecting a bounce because, what is this date here? This date here is 12/28. And what am I seeing on 12/28? I'm seeing a pull down into support. I'm expecting a bounce. So I held it, it did nothing, and then Solar had a massive day on Friday. I don't know if they changed some of the rebates or tax structure, took out its 50, Mobo breakout from a squeeze, momentum, volume, John Person buy. This one looks really interesting here, and it's already on my buy watch list. JKS, would I rather buy this, although it's got great earnings per share growth, or would I rather buy this, which is closer to a high? I prefer the one closer to the high. So in HGSI, I would typically go through 10 bull industry groups and 10 bears. If you own HGSI, let's do a little quick workshop. And if you don't own HGSI, go to www.highgrowstock.com. And, I'm not exclusive. I use whatever programs I think are the best program for me. If you watch my videos, you could see my enthusiasm for wealth charts. There are many programs that I like for different reasons. This is one of the reasons why I like HGSI. What I just did with the top down, but also what I'm going to show you right now. So I have all securities right here, and then I'm going to find a view that has boxes in it, because I'm looking for the stocks that have boxes, and I also want high ERG. Let's see if there's anything. All right, I did the wrong one, obviously. Let's try this again. All right, boxes. All right, so I think I have to use a filter. All right, let me look. Here it is. Well, that's just box 127, heaven. All right, I'm going to look at the filter side. So on the filters, I'm going to look for boxes. We type it here, box and ERG. And that did that. I got to stop doing the, all right. Hold on a second. Box and ERG. I know I have them because I used them lots of times. ERG 240 box stocks. So this requires that ERG, and ERG is a combination of earnings, relative strength, and group rank 0 to 99. And I'm requiring, with the way that I'm running this, that you have to have, let me bring this filter back in, that you have to have high ERG and fit one of those boxes. Very few stocks in the market. So here's new leaders, box and ERG. We'll go to 245. All right. So I should have 116 stocks. So of the 11,000 stocks in the database. So how did I make this? I went to all securities. I then found the filter that had new leaders boxes and ERG greater than 245. If you have to make your filter, it shows price and volume that you're comfortable with, not an index, has boxes more than 0, and an ERG rank, which is up to 300. You pick the number, because 99 plus 99 plus 99 is 297. I'm using 245. That gives me 116 stocks. Then I go into this thing here, which is called the Spectrum Analyzer. And now I got to go find Ian's boxes. So I want to open this up. And I've done this before because the boxes were right there. So HGS boxes are what I picked. And this is telling me of the high ERG stocks today, I've got 29 box 7s, 21 box 1s, 19 box 2s, 14 box 3, and so on and so forth. I'm not surprised there's so many box 7s because so many stocks are turnaround opportunities. Now this is the magic thing right here. I'm going to call this box off Santa rally 1.08.2023. And now magic's going to happen. And what just happened is you now created under your user group boxes off the Santa Claus rally, and you could see what's a box 1, what's a box 2, what's a box 3. If we are going to rally to new highs, I pretty much guarantee those new highs are going to come from these lists. The big winners are likely to come from this list. Does mean you can't have other winners, but these lists will typically outperform off of the bottom. All right, so I've showed you some new things today, or old things that I haven't shown in a while. Let's jump into wealth charts, and let's spend the last 20 minutes, 15 or 20 minutes, doing my top-down review inside wealth charts. So let's start here over on hot stocks. So the first thing about hot stocks is I'm feeling bullish, so I'm not looking for bearish things. It's running. It's going to give me a list of those, and I'm running it on ETFs, leading ETFs that have a flame. If they have a flame, it means they're moving now. Why does it matter? Because I want to find what's moving, not what's sleeping. So the other thing here that I don't like is in a really hot market, you're going to see 700s and 800s. So I've got a couple 600s. I got gold. I got pharmaceuticals. I've got international real estate, weak dollar play, dividends, developing world index. That's interesting. Short tech, short-term high yield bonds. Very weird things here, but notice how the number has dropped. So gold and pharma are interesting to me there. That's it. I have my indices here, and notice that I've got my trend lines written on them, the same ones I showed you. Now, we bounced at a pre-drawn trend line here. Again, this is the wedge. We bounced. I could draw a trend line in here, and we're in a wedge here. So this is the spider, the Qs, this is the diamonds, and the Russell. All of them have moved off their recent lows. I think there's a name for the pattern that we're seeing here. And the name is not necessarily a pretty name. And that name is a bear flag. Run up and a wedge. And when we break through this here, here's the wedge, the flag. So here's a pole, here's the flag. These things resolve to the downside. All of them have bear flags. Here's pole, flag, and so on and so forth. So I think we resolve ultimately to the downside, but short term, would it surprise me to go up and test resistance? It would not. Other things, notice that the daily bongos have turned green, but the only of the indexes, this is Spiders, Qs, Dow, and Russell, the only one with a weekly bongo that's green is the diamond, which is the leading right now. Clearly, it's the diamond, which is the only one that has broken its downtrend. It's the diamonds, and it's barely staying above that. Other things to see here, the VIX continues to go nowhere. It's one of the things that if you thought we saw a bottom, you'd expect to see capitulation, violence in the streets. You expect to see the VIX and the put-to-call ratio, which has been up, admittedly, both go very high. And then what's probably driving a lot of the good stuff is the dollar is broken down. This line here is an important line in the sand. Why? Because it was support back here in August, and it was resistance back here in June and in May, and right now it seems to be resistance to the dollar. I'm in the camp that a weak dollar is supportive of the market. Now, if we look at the commodities, you're going to notice the TNX doesn't jump up, so let me just load my Tastyworks. I get to see my username and password. Well, ... whatever. I don't think that's going to work for you. But this is pretty key. Look at what happened to the 10-year this week. After a little bit of a rally here, it has just died. And that's probably meaningful. Weak dollar, gold's up. Gold is broken out. Silver has been leading. Also had a nice day on Friday. Oil is weak, so weak dollar, weak rates, falling energy. That stimulates the market, I would think. And so does lower gas prices at the pump. Natural gas, ugh. To think I was playing Boyle up here, a 3x leveraged ETF. And I remember John Person, I was at his office talking to him, and he said that some like natural gas futures were widow makers. I understand what he was saying. The volatility is nuts. Weekly market timing, okay? I have three conditions. I have bullish, I have bearish, and I have confused or neutral. My bullish condition is the diamonds. Price on these are weekly charts, 30 WMAs, and weekly bongos are down here is the one I care about. So why do I say the diamonds are bullish? They're above the 30, and their weekly bongos is green. The other three are confused. The Qs, although had bottoming tails, their weekly bongos still red. They are below price. Technically, they're bearish. The IWM is about to take the weekly moving average. That would be great, but its bongo's red, so that's more neutral. And then also neutral, the spider is right at the 30, but even if it goes through, it won't be bullish until the weekly bongo changes. That doesn't make me very excited, except for maybe the Dow. Now, what do you see in the big caps versus small caps? I love the ability to make ratio charts on the fly in wealth charts. This is IWB versus IWM. Up here, large is in control, down here, small. So large cap, and then over here, spider G versus spider V. Here is growth, here is value. Large cap value is in play. Another word for that is defensive. Here are ratio charts, and these are short-term things, looking at spiders, and then I'm comparing each individual sector to the spider. Strength would be sitting up here in the upper right-hand corner. Well, who's got that? Materials, financials, industrials. That's your strength. Materials, financials, and industrials. Interestingly, defensive plays, staples, real estate, utilities, and healthcare all eased. Maybe that's good if you want the markets to go up. Having leadership from financials is great. Look how communications continues to come off the bottom while energy falls. Whereas the laggards, man, look at technology. Technology here and discretion here. That's where the laggards are. Financials, industrial, and materials. Okay. Now, if I go into my bull scanners, there's absolutely no reason to look at bear scanners. This is how easy it is. Now, heat map, take a look at the S&P 500 on Friday. This was a monster up day. I think it's pretty obvious. Very few things were down. If we looked at the sector scanner, also pretty obvious that on the daily and the weekly. So one thing that you can do, and that I like to do, and as I mentioned before, I'm a relative strength guy. I kind of use the algo score as relative strength. And so I want to have the high relative strength. All right, on the daily, that was materials, industrials, woohoo, communication services. Wow. And on the weekly, you have to add energy, interesting. And let's see what's on the monthly. I'm not putting utilities, but I'll put in financial services. Now I hit compare, and I just brought up all the industry groups in those sectors. Now let's use daily algo score, and let's just take the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay. Hit the shift key, and now there, so they all went. Now let's look at the weekly algo score and fill in the ones that are in that area. I'm not going to go to monthly on stocks. This is more a demonstration. Do your own thing. All right, that's enough. We'll get the oil and gas. Okay, so these are the leading industry groups. Now I'm going to hit compare. And now I got the best stocks in the leading industry groups. So this is interesting, all these negative performance on the daily, but I guess they're all up on the weekly of the high algos. Let's just start here and let's go down to maybe 650. Hit my shift key, click that. Now let's go to the weekly. I'm just going to go the ones on the up at the top so I capture them as well. and you get the gist of what I'm doing here. Now I'm going to add them to a watch list. So let's go make my watch list the weekend review, which is my bullish watch list. I'm glad I looked. And that's down here. Let's hit apply. I've already populated with a number of strong stock that I put together. And so now I hit add to watch list, and these symbols are added to my weekend review. So I've just built a top-down watch list. But in wealth charts, I don't need to look at every stock to see what they're doing. Rob and Ted and the gang really supercharged my analysis. Now, Wealth Scanner is a great tool, and I put ETFs in it, and it's kind of like the hot stocks, but I don't require the hot flag. I'm looking here for what are the leading ETFs in the market. Social media, okay, no surprise. Look at social. Beaten down, lots of overhead supply in the weekly, breaking out above the 200 on the daily. GXC, China, well, just look at Baidu and Alibaba and Pendulum, and you could see that with China reopening and perhaps also being a little bit more open on their books with the regulators, U.S. regulators, breaking out, okay. GDX, breaking out. Now, I don't necessarily have to buy these, but it gives me a sense of where to look. Gold, breaking out. So I might want to look at social media. I might want to look at the metals. Now, I don't think I have a watch list for social media. Frankly, I'm not so sure where I even build it from, but let's see, because I think this is something that's good to do as well. All right, what we're going to do is hit the funnel. Let's make a watch list. We're going to call it social media. Now, I'm not sure I'm going to be able to find it, but I'm going to go into communications. Let's go back to the sector scanner, and let's go return, return. Okay, so we're going to go into communications, compare. All we got is, oh, wait a second, return to sender. Okay, so I got to make sure. All right, so communications, compare. Why am I only seeing, huh, I don't know if this is going to do it. So let's see what we got in there. No, I need Facebook, I need, or I need Meta and others. All right, so I'm going to stop the video and I'm going to go make one. I'll be back. Okay, let me show you what I did. I went into the ETF components within HGSI, and these were the 4 ETFs that I found that had social media in them. Okay, and I guess SOCL is the one that is in the program. So I copied the SOCL stocks to this Excel spreadsheet. These are just, they're not social media stocks. So here is a list of 25 social media stocks. I'm going to save this file, excuse me, save as, import SOCL, OCL. Notice it says CSV, comma delimited, save it. And now I should be able to go into wealth charts, where this is a long one. Sorry about that, but I felt like teaching tonight. So I'll go into wealth charts. I am going to go into the watch list tool. Let me do this the right way. That's not what I want to do. Let's see. Return, return, return. Here's the watch list tool. Okay. Go down here, and I want to go import from CSV. I'm going to go find my social one I just created, which is right here. I'm going to hit choose file, import. Where did I put it? Oh, come on. I just looked at it. Hold on a second. Hold on a sec. Ha! I'm looking in the wrong directory. 1.8, import social. There you go. I hit upload, and now it says my social media stocks are input. Let's look at social media. Let's see if they're here. There they are. Awesome. So, Wealth Scanner tells me social media is hot. I go into my CAT scanner. Let's bring in social media, and we'll see if anything passes my filters. I'm looking for momentum signals in social media, and 4 of them gave me signals. Google, obviously a beaten down stock. My signal is a green dot. Relative strength doesn't look great. OBV, not great. I don't know if I'd be buying Google here, but it's like Apple, it's like Microsoft, it's like Tesla. They're pretty beaten up. At some point, they're going to bounce. Do you put some away for a rainy day? Pinterest is kind of a interesting stock, going sideways, building a base here. Only 1 dot popped up. Relative strength looks better. But the one that's probably more interesting is clearly Faceplant, now known as Meta, because Meta is broken above the 50 and the 17. Relative strength is up. OVV is up. Daily and weekly bongos are up. Yellow here was a squeeze. It's now come out of the squeeze. It's had great volume. It had a breakout in momentum. I think Facebook looks interesting. So a top-down approach. I found the best of the ETFs, and I looked at the components. Let's look at gold and silver, see if any of those look interesting. Now, I'm looking for fresh moves, things that have already broken out and run, are extended, and I'm more interested in brand new things. HL, Hecla Mining. Woohoo, look at this. I think this is mostly a silver play, but sort of a cup and a handle and a breakout here. You could draw sort of the cup, the handle, and a breakout. Breakout, volume, momentum from a squeeze, relative strength above the average, OBV. Yes, it's got overhead supply, but Hecla looks interesting. AG, I think we talked about last week. AG is struggling here, but looks like it's trying to break out. All right, that's another thing we can do. Or I can take that big watch list we just created and look at the stocks that were in the top sectors and top industry groups, and let's look and see what we come up with. What comes up to the top? AEHR, like this one a lot. This one had a big gap up. I believe it had some great earnings. Look at the volume. Now, 4 dots here, 3 dots here is because it lost the gap dot because it closed in the lower half. Don't like how it closed, but this is one that I'm going to watch. Look at how relative strength and OBV turned up. Costco. Now, Costco, I could tell you it's a buy, and I could tell you it's a short. How is that possible? On the very short-term daily, 4 dots, major volume, breakout, EMS signal, relative strength and OBV look great. Costco looks awesome. But why don't I like Costco? It's got to get through that 50 and the 200. It is clearly on the weekly chart, which is the chart to the right. In a downtrend. So like the markets, there's a lot of work for Costco to do to make a big move. That said, Costco looks interesting there. IRDM, I don't know, satellite company, I don't know. Reminds me of the AVGO chart. This one broke out after a nice, very lengthy squeeze. 4 dot move, huge volume, relative strength OBV. This is in communications, I think. Well, I think it's more telecommunication. JKS, we looked at this when we were looking at First Solar. JKS, 4 dots, which means a gap up, closed near the highs. But unlike First Solar, this one's got a lot of work to do. There are a lot of stocks here that look interesting. See if anything that I want to. Here's AVGO. Remember I said similar to IRDM. You know, breakout, retest, running again. I like AVGO. So I just showed you in multiple different programs a couple of things. I showed you the markets are near support, and it's hard for me to be all short when I'm sitting on support. We got the bounce on Friday. I think that was expected and not a massive surprise. Second thing I showed you is that whether I'm using HGSI, wealth charts, and I could have showed you other programs like VectorVest where I was at for a meeting today, I like to look at things from a top-down approach. I make my stance bullish or bearish on the market. I look at industry groups, and then I look at the top stocks and the top industry groups. Another thing I showed you is those boxes, which is a great way of finding the new leaders. You can only really do it easy in HGSI, but I know a lot of the people that listen to me are from HGSI. I want to show you how many 4s and 3s that we have that are bullish. I don't remember the last time when I saw this many 3s. All right. So one thing I might do is filter that. And to filter it, I'm just going to require that it had a short-term reversal in the last 2 weeks. So I'm going to put less than or equal to 8 days because both weeks were 4-day weeks, I believe. And I'm looking for, let me make sure. Bongo daily 8 days ago. I want bullish on daily, bullish on weekly. Hit apply. And I still have a lot of stocks. See if anything else. Worldwide Wrestling. This is all because McMahon is coming back. I don't know if that means anything. I think they're going to try and sell the company. I looked at a lot of stocks this weekend. I'm just seeing if anything. BlackRock. I mean, if BlackRock is showing up here, breakout, pullback, and going again with momentum, volume, and breakout, improving relative strength in OBV, I think that's cool. And I think, BlackRock's a big company. CHX is a high earnings growth rate oil services play. Flagpole, this is a bullish flag. You run up, okay, you pull back, and one could argue one of two things. Is this all over and this is a bear flag after this rundown, or what I think is much more likely, and I probably shouldn't even said what I just said, what I think is likely is that that this is the flag here that I'm identifying. And we just broke out of that bullish flag. Ian used to say from 21 to 33, 12, you should get 60% of that. So you're probably going to go from 29 to 36. Champions looks interesting here. And this is done in the setting of falling oil. I'll tell you that when I did my weekend review this week, there are a lot, and I mean a lot, of attractive longs. And guess what? There's some attractive shorts as well. I'm going to be playing it both ways. I'm not going heavy to the short side, but I've got my shopping list for potential shorts made. So if this market breaks down, I can go short. Now, there's one more thing I wanted to do. Think, Jeff, what was it? Oh, yeah. It's Netflix time. And do we have an edge? And actually, let me talk about this for a second. One of the beautiful things about wealth charts is how I can play with seasonality. So I'm going to pull up what I call my combo list. If you watch the videos, you see I put this in my comments in YouTube. And if you have, excuse me, if you have wealth charts, all you really got to do is go into where you have a watch list. You need to create a watch list. I have one called Combo, Scott Combo. And then create that watch list, import from CSV, find the Scott combo, or whatever you're going to call it. You call it whatever you want. Find the file, if you have one, or more important, import with a code, and then you take the code. So you got to go back here and find Scott combo. Sorry about that. And then you type the code in there, and that will put my list into your program. But if I go back to seasonality, the combo's got 900 stocks. And I'm asking the question, over the next 8 weeks, if you have 10 years worth of time, so stocks that have been around for 10 years aren't going to show up, what's got the best return? And this goes through and shows you a couple of things. It shows you, do you have options available? What is the last price? Projected change over the next 8 weeks, and the projected price. Let's bring this down to 4 weeks. And you'll notice up near the top is our friend Netflix. So Netflix has been, over the next 4 weeks, and it's got much more than 10 years data, has averaged a 9% return. 9% on a $315 stock is $27. All right. Here's the chart. This first line is last year's data, January 10th, which is as close as I could get to the 9th. And this, because it's weekly, and this is January the 31st. Network's earnings probably come out the 17th or 18th. You need to figure that out. I don't have it in front of me. But this tells me that in the last 10 years, Netflix has been up 8 out of 10 times with an average return of 6.81%. Now, they're including 2023 because it's within that period of time, I guess. But look at the average, the max profit 33%, the average gain is 14.6. The problem with this trade is 22 killed us. 16 was bad, but boy, people made, and I made, considerable money on the years that went up. So the question is, do you play Netflix? I'm going to leave that to you. But here is the projected chart based upon Netflix seasonality. So Netflix is strong seasonality. It's only 8 out of 10. I preferred it when it was 9 out of 10. It's well scored. 624 is not too bad. But this is something that I'm going to be tracking. It's funny, I had people come up to me this weekend who had gotten my Netflix trade in the past who were thanking me for it. It's been a long time since I've seen them. So on this note, I'm going to say good night. Put your comments in. I know I talked too long and too much stuff. What did you like? What did you not like? What do you want me to do on these weekend reviews? What's most helpful to you? And if your answer is, which it could be, and it would be fair, Jeff, I just want to know what you think of the market, and I want it in 10 minutes or less, I got something for you. What I got for you is Stocks and Docs, stocksanddocs.com, and you'll get a 10-minute video most days of the week. Have an awesome week. And, oh, by the way, don't forget the talking feds.